Well, greetings and salutations, test takers. This is Series 7 Guru coming from my off-grid studio, getting our kicks on historic Route 66 with our Q&A jam session. You're welcome to sign up for the Q&A jam session on the booking page at deantenneytutoring.setmore.com. It's free. It's one of the few things that is free on the booking page. YouTube is always free. All right, so let's see what we're going to be jamming on today. Let me let people in the room. Boom, boom, boom. Well, greetings and salutations, everybody. Welcome to our Q&A jam session. We do it around the horn, so to speak. So put into the chat what you'd like to talk about. One question per trip around the horn. And then we'll come back and catch your second question if you have one. Nobody's got any questions? Well, that'll be at the end of a jam session. It looks like we're a little early. It's boom, boom, boom. Jasmine, are you taking Series 7? Where's that coming from? 66. Okay, let me grab the Kaplan Q bank for 66 and bring that up. Do, 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 do. Do, do, do. Okay, 66. Okay, boom. Let's go get you down. Get the Q bank. All right. Do, 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 do. Where did you go? There you guys are. Let's get that going. Get the Kaplan Q back. Can you guys see my screen? Yes, no, maybe?
Yes.
Yes.
So 162. Let me move the chat over here. I can see it better. 162 8172. A client of your broker dealer accepts a recommendation and turns in a market order to purchase 600 shares. So market order means you client wants immediate execution at the best available price. Based on the following market maker quotes, it would be expected that the firm's trader would direct the market to. I like this. I call this, I have a video, I'll link in the video description on the replay called Know Your Bid from Your Ask. Right? And the quotes are always from the dealer's perspective. Right? I think a good analogy would be a car dealer. I'm a car dealer. I provide liquidity in cars. I'll turn money into cars or cars into money. And you say, Dean, I've got a Lincoln how much for a Lincoln Navigator? I go 90 grand. You go, great, I've got one. Where's my 90 grand? He's gonna say, ooh, Dean, I'm sorry. I thought you wanted to turn money into a Navigator. Now I understand you want to turn a Navigator into money, 50 grand. I go, oh my God, what's that called? He said, Dean, the spread. I was going to be a broker, but then I heard about the 5% policy. What the hell is that about? Right? So customers always pay the high price, always receive the low price. That's the securities industry. Right? You know, when you trade in your car, you're going to get the low price, but you'd want the highest of the low. When you buy a car, you know you're going to pay the high price, but you would want to pay the lowest of the high. So based on the following market maker quotes, so the customer is buying, so he wants to pay the lowest asking price. The lowest asking price. Now, here the lowest asking price is $22.25, but market maker B is only good for 500 shares, and my customer wants to buy 600 shares. Right, and so if I call market maker B, he's going to say, well, Dean, I didn't say I would sell 600 shares. I'm displaying 500. So that's why it's A and not B. Any questions on this one? What were you struggling on in this one? No struggles?
Yeah,
All right.
that makes sense now. I was getting the 10 by 8 and the 6 by 5 confused.
Now that's called the size of the quote, and that's round lot. So, market maker A, if I'm the market maker and you're the investment advisor representative and you call Dean, what's your quote? I say 2205, 2225, 10 by 8. That means I'm going to buy 10 round lots into my inventory at 2208, and I'm going to sell 800 shares out of my inventory at 2225. I don't think on the 66 particularly that, if you tell me you missed your mark because you didn't understand quotes and over-the-counter trading, I'm going to say, I don't think so. I think that's one of the challenges, though, on 66 and 65, both NASAA exams. They're all over the place. They got a question like this, and they got something completely different on something else. So always a challenge. All right, looks like our next one is a Series 7 question. Okay, let's get the Series 7 QBank. If you don't have a Series Kaplan QBank, I highly recommend it as a paid supplement. In the Series 7 QBank, for example, you can get it for as little as I think it's $55.80 with my Guru 15 discount code at checkout. And for that commercial, that's why Kaplan allows me to give people, these test takers, free look on Kaplan content. I'll help you with any question from any provider, but if it's SVC or Past Perfect, you got to screenshot it so I can see what you're looking at. If it's a Kaplan question, I can bring it up backstage. Until I say something stupid and Kaplan takes away my access. I'm joking. I'm joking. This is my channel, so sometimes I forget when I'm teaching it. Once a month, I do a collaborative class with my company, Guru Exam Prep with Kaplan, and sometimes I forget the videos going, and no, I didn't say anything untoward, but this guy and I were chatting up. I'm an NBA fan. We were talking basketball like 3 hours. The video guy at Kaplan said, "Geez, Dean, please kill the video, after you're done." Customer bought 200 shares at 32. He bought two XYZ June 35 calls at 3. So kind of odd here. First thing I think is it's kind of odd that he's buying calls. This guy is really a bull. He's already got 200 shares, and now he's got a choice to buy another 200 shares at 35. So I think that's kind of on. My guess, Kaplan being jerks, my guess is they're probably going to bait us into thinking this is a covered call. And, it doesn't say that he wrote those calls, that he bought them. It says that he bought a one put, again, really funky. I haven't even got to the question yet, but I would tell you, give yourself some grace on this one. I mean, I can already tell out of the gate, this is, Kaplan being jerks. This is probably a gotcha question at the end of the day. But let's see. I think when you get all this stuff going on, it looks like to me, actually, this is going to be a churning question. I mean, my goodness, I got to love this guy, all these trades he's doing. But if you've been with me and watching my channel, I always say, fire up the tea. Right? So now we're going to start tracking this stuff. I usually say do things on a per share basis. But again, this question is kind of challenging. And the reason it's kind of challenging is because I've got, I get to the one put instead of two. Right. So in this case, I'm going to make an exception to what I usually do, which is per share. And I'm doing that because this is kind of odd. So I'm going to say I'm out $6,400 for the stock. You see, I got the 6,400. That's 200 shares at 32, right? I'm out 600 for the calls. And I'm out 650 for the put. I call this the initial setup. And again, if you've been with me any length of time, you know that I believe in spending a lot of time on setting things up. Now, the other reason I like the T is because the T helps us in terms of knowing what's going to happen here, that we're probably going to be offsetting these transactions. And so, that's why I like the T too. And I would have, labeled this dollars out. You can use, debit, you can use minus, whatever floats your boat. I personally like to use dollars out, dollars in. And there's a lot of different ways to do options, but I always think if you are good at contract specifications, in other words, you're not struggling, that's a choice to buy 200 shares at 35, and you can track money, I think you're in pretty good shape. Right? There's even this question now. I know there's shortcuts and there's people who have different methods of doing it. And then when you ask them a question like this, oh, you won't see that on any test, so don't worry about the T. I'm like, yeah, okay, maybe. I mean, this is, I told you, kind of a jerky question. All right, so 2 months later, the customer purchased an XYZ June 35 put at 4. Oh my God, gotta love this guy. I mean, you know, if I were your supervisor, I'd probably call you in and go, what the heck is up with this guy? Right. So now he bought another put. I do what I like about this question, though. I'm glad you brought this question up because I think it's illustrative of why the T is kind of a protective tool, because if you're good at the T, no matter how many stuff is going on, you know, you can figure it out. Okay, so now we're going to probably be, and this is what I usually would expect in a test question, is that we're going to be asked to do the offset. Right. So now we're going to be having money in, credit, plus whatever you want to, think of that as. All right, so let's now see. Okay, so before expiration, the stock is trading at 37. So the stock is trading at 37. He sold his stock. All right, so let's put that in there. If it's 37 on 200 shares, that's going to be 7,400. And we'll just make that the same size as our other one. Boom. He sold his stock. He closed his calls for 210. So 210 is $210. And remember, there are two contracts there. So that's actually $420. Right? How did I get the 210? 210 is 210. 210 is per share. Per share. Each contract covers 100 shares, and it's two of them here, right? He closed his puts for 25. That's $25. And he's got two contracts there, so that's going to be $25. And then this is going to be $25. Wow. All right, so now it looks like we can net this all out and see if this guy is happy or sad, right? Well, let's see. So 6,400 and 600 is 7,000. I'll get out my calculator. I'm terrible at arithmetic. I'm not kidding. So, somebody offers me a calculator, I'm gonna say thank you very much. So I've got boom, 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 plus 650 plus 400. So it looks like I'm out $8,050. Boom. Okay, now we got to figure out what we're in to see if we're winners or losers. 7,400 plus 420 plus 25 plus 25. I get $7,870. So I think I'm a sad person. Everybody agree I'm sad? I'm sad because I got more money out than money in, right? And then I'm just going to net those numbers and hope that I get one of those answers. 8,050. I get $180 loss. Tough one, right? So the answer there is A. Let's see what Kaplan said. Well, lots of ways to do options. I do T's, so it doesn't look like they did a T here. I like Kaplan. Let's do the math. Let's do the math. All right, so let's see. We got going around the horn. We did this one was, what one was this one? This one was 156. So now we got an SIE question. All right. So let's go get the SIE. Is that a Kaplan question, Kaylee?
Yes, it is.
Okay.
Sorry.
No worries, no worries. Because if it's not, I can't bring it up, right? But are you using the fourth edition of Kaplan or fourth? I don't think it matters on the cube.
Third edition. Well, I have the third edition. I don't know if it matters.
I don't think it matters actually. Let's see. Let me clean up my slide. Boom. Okay. And let's see. This is QID 1466302. Oh, come on, Dean. What an idiot. The guy thinks he can use this. Let's try that again. Let me get rid of that. 1466302. 1466302. Is this coming up as part of your mastery, Kaylee, or a quiz? Sometimes it would be blocked if it's something like a mastery exam. Could you check that QID for me?
It was in the Q bank. Um,
All right, let's try the third edition. Maybe it's different. Let's try the third edition. Boom, boom, boom. I wish Kaplan would stop coming up with new editions. It's just,
I didn't know they had another edition.
yeah, I shouldn't tell you that. I like the third edition better, but there's somebody who writes books for a living. He's always writing new ones, right? Okay, boom, boom, boom. Let's go to the QBank. Where is the QBank? Basically, the change is it's just prettier. The fourth edition is prettier. All right, let's try it again. 1466302. There we go. Okay. Ooh, I like this one. Very, very testable. The only two ways you're ever going to make money on an investment is income stream and price appreciation. If there's no income stream, then the only way you're going to make money is through price appreciation. Right? If I'm out here off grid and I buy, there's a guy who's trying to sell me 80 acres as an investment opportunity. And it's raw land. There's no income stream. So the only way Dean's going to be able to make money is to sell that 80 acres to someone else for more than I paid. I would prefer to buy an apartment building where there's rent. I got some income coming in, and then maybe I can flip the apartment building and get some money there too. In stocks, that would be the income stream dividends plus price appreciation. This is very testable on all exams. These two together are called total return. Total return, very testable. I might, on all exams, I might actually ask you to even calculate that. So I say, I'm pleased as your investment professional. We had a capital gain. I'm simply there saying we sold the investment. Maybe it's a bond and interest rates have gone down. I say, hey, not only did we get to collect the coupon on the bond, we also got to sell it because at a higher price because interest rates have gone down. So we got a good total return on that bond. And a stock, we collected the dividend along the way. And then we got some price appreciation. Mr. Buffett says he likes stocks that pay dividends because he likes total return. He likes to get an income stream on his investments. And he also likes the idea that he might get some price appreciation as well. All right, so I like this one. Yeah, what were you struggling on this one?
I'm confused why D wouldn't be correct, because wouldn't it technically?
Oh, no, because remember that's income. So the two basic types of return on investments is income. D is both income. Those are the same things.
Oh, so it wanted both of the
Dividends on
types.
stock,
Okay, got it.
on bonds
Okay.
are income.
Okay.
So, the two ways you make money, by the way, not only just stocks or bonds, are just investments in general, right? The only two ways you're ever going to make money is income stream and or price appreciation. Right? I get in trouble. I get in trouble because I'm demented. I've been doing this way too long. I was having a conversation with a young lady, all relative, and I said, listen, that other guy is a serious growth opportunity. Nothing but upside. But he doesn't pay dividends. I pay dividends. No total return with Dean, man. Price appreciation is over, right? So, hey, I have a very low beta. He has a very high beta. Oh, man, she got even madder. She goes, that's the problem with you. Everything's an investment. And I go, well, not every investment works out, right? I mean, I understand you want to stay diversified, but, now you have selection risk. You got to pick, right? You can't stay diversified at some point. It was funny. We were on the floor at a basketball game, and she got so mad she stormed off. And says she coming back? I go, I don't know. That might have been the last straw. All right, let's see what our next one is. By the way, very testable all exams. STC and Achievable, Mike. I'm not sure what you mean by that. Are you just telling us what you're taking?
Yeah, I thought you were asking
bring up
which
the
one was
question?
listed,
Will
but
that-
yeah, I have the image and you just have to click on it. The
okay,
very
let me
next
see
one.
how that works.
then
Ooh,
you,
love that. Okay, well, is it coming up? Let's see.
yeah, it should come up and then you'll just be able to click
Oh,
on
look at that. Oh, that's
to
awesome.
enlarge it. Yeah.
I'm technically illiterate. That's how easy I am impressed. I'm like, wow, that's pretty damn cool. I should be able to do that. Let me see if I can make this bigger.
If you click on the little microfilm glass on it, you could make it bigger, but yeah, that works too.
A municipal bond with an 8% coupon has 8 years to maturity and is purchased at 106. Okay, this is 50% probability on your exam. You know, half the time people tell me they had to deal with this, and half the time they tell me they didn't have to deal with this. So I debate whether I should even show this to you because you probably get more questions wrong than right. What I'm about to illustrate to you is only for muni bonds purchased at a premium. The IRS, Mike, thinks you don't take your last buck and buy a muni bond. They think you have other investments, and that's correct. Yes, on their part. And what they think you'd like to do is take that $60 loss whenever it's convenient for you to offset gains you have elsewhere in your portfolio. That too is true. And they say, no, Mike, if you buy a muni bond at a premium, you have to do straight line amortization downward. Straight line amortization upward is called accretion. Straight line amortization downward is called decretion, not decibel, but we're going to be going down here. So I'm going to say, hey, Mike, you're losing $60 over 8 years. My calculator. This could, but by the way, this could be 3 questions. In other words, a lot of work for 1 point, but they could say, what is the amount that the cost base needs to be adjusted each year? That's not the question here, but you can't get to the answer without doing that. So I say, well, $60 divided by 8 years means, Mike, each year we're going to have to adjust it $7.50 in terms of our cost base. Right? How'd I get the 60? 106% apart, 1,060. And then it says I held it for 6 years. So now I'm going to times it by 6. So we should have adjusted our cost base down by $45. So our original cost base was 1,060. Our adjusted cost base is 1,015. Now to get to 1,015, I subtracted from my original cost base the $7.50 a year for 6 years. Right? Oh, by the way, I'm done. I thought what it might have said, Mike, is then we sell it, right? Because that could have been the next question. Right. And if we sell this for like 102, we've got a gain. And by the way, if you didn't know this in 102, you'd say, oh, I got an easy one, 1,060, 1,020, I lost $40. Right. So muni bond purchased a premium. Again, I think 50% probability you'd have to do that. Right. Just depends on your draw. I'm wishing for everybody. I always wish for all test takers a dream draw. Everything you studied shows up and you go, man, I know what the big deal was. And so, you may not see that. You may not see that. Sometimes people see it, sometimes they don't. All right, what's our next one? SIE, are we still in the SIE Q Bank? I think we are. SIE 147. 147,7584. Ooh, I like this one. If I come into your office and say, hey, I want to lose so much money, you can't tell me how much. I think this is more of a 7 question than an SIE question, but short a July 50 put. Now that's a lot of money, but it's definable. I say, hey, Mike, the worst case here is you're going to pay $5,000 for worthless stock. Right? So, that's not unlimited. If you sell things you don't own, you probably heard that saying, don't sell that person short. They might surprise you. Daniel Drew, legendary Wall Street speculator, said those that sell what isn't his'n must eventually buy it back or go to prison. Right? In most businesses, selling things you don't know is called fraud, but 2 will certainly do the trick. If you sell short, that exposes you to unlimited risk. If you've been watching my channel, I always say, don't be a dumb bear. If you're going to be a bear, be a smart bear, be able to take the picnic baskets without, getting wiped out, right? Naked calls, naked. If you're outside the privacy of your own home, naked, or good things or bad things likely to happen, bad things. In fact, somebody might say, why don't you cover yourself? So an uncovered naked call is when you're agreeing to sell stock you don't own. So I say, listen, I'm looking in your account, Mike, where is the stock? Covered call is one of the most conservative strategies we have available. That's agreeing to sell stock you do own. And you're doing that to generate additional income. So this is 2 and 3. I think this is more a test question for our Series 7 candidates like Mike than it is for an SIE person. As an SIE test taker, if you tell me you missed the mark because of options, I'm going to say, I don't know. Most of the option questions, 3 or 4 of them are going to be recognition. Like when do options expire? When does the option agreement have to be back? It's mostly recognition. All right, let's see what our next one is. We got a 66 coming up. All right, so let's get our 66 Quebec. Boom, boom, boom. 66. All right, and this one is 152 1447. Is most likely be graded against. I don't think you're going to see this. I don't think you're going to see this at all, but now it's the S&P 400. The ones you are going to see is large caps, S&P 500. You will not see NASDAQ 100. You will be asked the Dow Jones Composite is price weighted. It's the only average that isn't market weighted. It's price weighted. This is both 65 and 66. The other ones I would add, so I wouldn't worry about this, but the other ones you would add that you are held accountable for is the benchmark for international investing, EFA. This is for 65, 66. EFA, that's the benchmark for international investing. That stands for Europe, Australasia, and the Far East. The other one you're held accountable for is Wilshire 5000. And the Wilshire 5000 best reflects the total U.S. stock market. Another one you're held accountable for is the Russell 2000. The Russell 2000 is for small caps. All right, so those are there. So I think this is an odd one. I don't think you're going to see A. I think you definitely see B. By the way, the other one B is about is whenever we're talking about on 65 or 66 about market return, we're always talking about the S&P 500. Right, so if I say the beta, it has a beta 1.5, that's 1.5 more times volatile than the S&P 500. So that's important. All right, let's see what Kaplan says here. Yeah, who cares? Sometimes I say in this stuff, make a flashcard. I think this would be a waste of a flashcard because I just don't think it's going to be that important. All right, it looks like we got a couple more Series 7s here. So let's get our Series 7 Q Bank. I'm very impressed. Mike knows how to do that. I'm gonna have to buy tutoring from Mike and have him teach me how to, be able to put things into my my chat. Series 7. All right, let's do these two. Boom. And our first one here is 1, 5, 6, 4, 1, 6, 7. Oh my God. Many life insurance. I would tell you on 7, if you tell me you missed a mark as a life insurance, I'm gonna say, yeah, I don't believe it. I mean, once in a blue moon, you get a question about a variable life illustration, can't be more than 12%. It has to have a 0% return, but the insurance questions that are going to come up are not going to be about insurance. It's going to be about comparing variable annuities with a fixed annuity. Many life insurance companies offer variable products. I think of a variable annuity as a mutual fund with an insurance wrapper. A mutual fund with an insurance wrapper. That means you got to be licensed to sell insurance and you got to be licensed to sell securities. Determining the benefits usually depends on the actual performance of the separate account. The separate account is a mutual fund. So to say you have a variable annuity, I just have mutual fund with an insurance wrapper. To say you have 6,000 accumulation units in a separate account intellectually is the same thing as saying you have 6,000 shares of a mutual fund. Separate account means we're distinguishing this. It's segregated from the general account. So that's what this is. And very testable, you have investment risk. Okay, so separate account compared to the assumed interest rate. So if you annuitize, pretty cool, you can turn this into an income stream that you can't outlive. Pretty nifty. And there's various ways we can pay you if you choose to annuitize. Test question, if you choose life only, that will give you, test question, the largest monthly check. Once you annuitize, we're going to turn your accumulation units into what we call annuity units. It's just an accounting metric. And then that check is going to go up or down based on whatever the error is compared to the return. We get higher than the error, check goes up, lower than the error, check goes down. We get the error remains the same. All right, actual performance compared to the error affects the cash value of a variable life. Now, the idea of a variable life is that at some point, this separate account would cover the cost of insurance. But the cash value is going to be affected in a variable life based on that. Right, so that's not true, which with the song reflects that determination. 2, actual performance compared to the error affects the death benefit. Yes, you're going to get a minimum death benefit. So if you die, you get a little bit something, right? That's true. Actual performance compared to the error reflects the value of the accumulation unit. No, the reason that's not true is I just told you they're no longer accumulation units when you annuitize. They're now called annuity units. You don't have accumulation units anymore when you annuitize. You know, they say, and I believe this, you know, passing your Series 7 is like learning a foreign language. And they say when you dream the foreign language, that's when you know it. As you're, you know, somebody trying to help you, I wouldn't feel bad if you went for 3. I think it's a pretty much of an esoteric kind of a nomenclature vocabulary thing about why 3 is wrong versus why 4 is correct. Because I told you in 4, once you annuitize, you no longer have accumulation units. We use an accounting metric of annuity units. And then that check goes up or down by the value of that. Were you struggling with the difference between 3 and 4? I wouldn't worry about that if that was the case.
Yeah, that was what I was trying to, because I know accumulation unit, it kind of
Yeah, and then look at this too, by the way. Whenever you roll down the explanation, they got to send a paragraph telling you why you missed it.
yeah.
I kind of think that's kind of a gotcha question a little bit, like, okay, so you thought you know it, and then they do that to you. All right, looks like we got another Kaplan question, and we got Mike's question. So let's do the Kaplan question here. And the next Kaplan question is 1557910. A corporation has 1 million shares of common stock outstanding. So outstanding stock is issued less treasury. So that's what outstanding is. That definition could have been tested. There's also $100 par, 6% cumulative preferred issue with 100,000 shares outstanding. If the corporation wants to use a rights offering, wishes to use a rights offering. So as an investment banker, I'm advising you on raising money. And I say, listen, the most likely candidates to provide you with additional equity financing is your existing owners, because they're already in the hot water with you. And so what I would suggest you do is issue some more common stock. You know, your common stockholders, your existing owners, have a right to maintain their proportionate ownership. I have a friend who, him and his wife own this company, and he wants me to invest. And I said, you know, I'm not, why would I even do that? For a lot of reasons, but that means your wife is going to get diluted on her proportionate ownership. I don't want to be talking to your wife about, you know, how come she doesn't own as much as she used to because Dean bought some stuff. So we're going to do a rights offer. We're going to go to our existing shareholders and say, how would you like to maintain your proportionate ownership? Your existing owners have the first right of refusal on the issuance of new shares. And if we can get this from our existing shareholders, we can save some money. So we're going to let them very testable. We're going to let them subscribe at issuance. We're going to let them subscribe at less than the current market value. Give them an incentive to come up with the money. And it's short term. It makes sense it's short term, very testable, because we need the money and we need it now. Now, the preferred stock here is a red herring. It has nothing to do with answering this question. Your preferred stockholders don't have a right to maintain proportionate ownership. It's only the common stockholders that have that. So if we're gonna offer 1 million shares, right? We're gonna divide by the 500 and find out you need 2 rights to buy a new share. Because that would have been what works out in terms of the same proportion. Right? You could kind of play around with this. If I owned 100,000 of the million, I'm a 10% owner. Right? And so if they issue another 500,000 shares, I'm gonna need another 50,000 shares. So, by the way, I don't think you're gonna have to do any of this. I don't even think you're gonna have to do theoretical value of a right. I do think you need to know the rights are short-term exercisable below. And what you got to be able to do on the test is contrast that with warrants, which are long-term and exercisable above, right? If you want to participate, we'll send that into the rights transfer agent for as many shares you have. That's how many rights you have. So let's say you had 1,000 shares. So 1,000 rights, 2 rights. That means you can buy 500 more shares. We send that into the rights transfer agent and you will have maintained your proportionate ownership. Now, if you don't subscribe, you're going to get diluted. Right? In my example, I have 100,000. I don't buy 50,000 more. They're going to sell it elsewhere, and now I own 100,000 of 1.5 million. I always use Howard Schultz in this regard. You know, Howard Schultz used to own 100% of Starbucks when it was 8 stores in Seattle. And it's not that he sold any Starbucks stock, he didn't. It's just he kept issuing massive amounts of stock to build the business. So last time I saw, he owns like 6% of Starbucks. Now, I see him interviewed and people talk to him about being diluted. He goes, what do I care? I own 6% of a bigger pie. You know, so, you know, owning 6% of 8,000 stores is, you know, probably better. All right, looks like it's Mike's turn here. Oh, that is so cool. A 75-year-old, whoa, what happened there? Let's make it bigger. 75, minute I see 75, I go, ooh, I better be careful. You know, seniors are a protected species. Rightfully so, by the way. You know, my mom is 80 and I take care of mom, and boy, it just is disgusting how many people wake up trying to rip off seniors. I mean, it's just, and man, they're so clever. It's like they're always inventing new ways to trick people. I said, Mom, was that you who shared that on Facebook? She goes, yes. I go, well, you know, it's a scam, right? You're promoting somebody's scam. She goes, no, it's my friend's son. I said, your friend's son isn't telling people to send him money for a deposit on these assets, you know. Could you please delete that? At least my mom wasn't the one being defrauded. She's helping the scam along the way, I guess. Anyways, a high level of income. So that's our first hit. Income. He wants, our first we're talking about, he wants to maintain a balance between income, safety of principle. The minute we hear safety of principle in the exam, we should be thinking full faith and credit of the United States Treasury. Because there's nothing better than that, right? In terms of safety of principle. So I hear safety of principle, I'm thinking, which of the following funds would most likely meet this requirement? Now, when you get stuck on these suitability questions, you know, maybe you can try process of elimination. We should have been able to get rid of A. That's a junk bond fund. Why would you do that? An investment grade fund, well, you know, I don't know what that means. It could be an investment grade fund. I don't know. A balanced fund, I would probably get in trouble. I think that's a reasonable kind of thing. If it was a balanced fund, it would have stocks and bonds in it. Right. And so the bonds are out because he says the stocks are out because he wants income and he wants safety. Right. So that's why I don't think it's a bad answer. It's just not, you know, as good as Ginnie Mae's. Ginnie Mae's are very testable on all exams. And there are 3 guaranteed test questions on Ginnie Mae's. They pay interest and principal monthly. It's the only investment that pays interest and principal monthly. It has the full faith and credit of the U.S. Treasury. The other agencies do not. And it's fully taxable. Now, whenever there's 3 of a thing on a test, you can rest assured all the following are true of Ginnie Mae's, except. Right? So they love those except formats. All right, looks like our next one, I think I kept the Kaplan Q Bank up. So there we go. Our next one is a Kaplan Q Bank. 154. 1545677. An investor buys 2 RST 40 calls and pays a premium for each. He also buys 2 RST 40 puts and pays a premium of 2.5. So same action, buy, different option. You should have been able to identify this as a straddle. This is a long straddle. A straddle test question, you got to be able to identify it. The other thing you got to be able to do on a straddle test question number 2 is calculate the break-evens. You've got to be able to calculate the break-evens. So the break-evens here are always expressed per share. Not sure if that's where you struggled, but it's per share. So I'm out 4, I'm out 2.5. So whenever I have a buy, I add. Right? If I buy the stock, I buy a put, I combine those numbers. Whenever it's a same action, buy, or sell, I combine. So I'm going to combine those. I'm out of pocket here, 6.5. So my upside break even is 46.5. And my downside break even is what? And again, I told you I'm arithmetically challenged. 40 minus is 33.5. Okay, so you could have just compared this to your break even, but I'm going to do a T because I'm a big believer in the T. I'm going to fire up the T, right? So I'm going to do, I always do it per share. And then when I'm all done, just remind myself that there's 2 contracts there. And the reason I like to do that is because I don't have all kinds of zeros floating around, and it's just easier, right? So I'm not going to put 800 in there, and I'm not going to put 500 in there. I'm going to put, I'm out 4 and I'm out 2.5. Now I kind of like this question because I think, I apologize, maybe it wasn't you guys, but somebody was talking today. I always say that, intrinsic value is more important than time value because of questions like this. They say close it out at intrinsic value. And you might be struggling. You don't have to necessarily buy into that language if you don't want to. I mean, you could, just compare it to your break evens, right? I mean, you could have said, okay, well, my upside break even is 46.5. That's my upside break even. And what I say, 33.5 is my downside break even. And I could have compared, and remember the third test question about a straddle is where do I want the market price to be in relationship to the break even? Silo, short inside, long outside. Short inside, long outside. Right. So, okay. So on expiration date, it's trading at 32.50. And so what I like to do is I like to put my 32.50 either above or below the strike to make my comparison a little easier. Right. So I'm going to put my 32.50 there. And I'm going to put my 32.50 here. Boom. He closes out for intrinsic value. So the intrinsic value here, it looks like Dean put the 32.50 in the wrong place. By the way, the good thing about having a process, by the way, like Dean does, is you're going to catch yourself. If you don't have a process, then you don't catch yourself. And, I can't tell you how many times on the channel I will make a mistake. And before people give me 10 seconds to catch myself and correct it, they're sending me all kinds of nasty comments. How could you be a guru and you can't add up 4 and 2.5? I'm like, whoa, please take a deep breath and give me a second, and you'll see that I caught myself, and I'm back in business. Anyway, so I like to do the T, and that's one of the reasons I like to do the T, because again, the T is just a little more cleaner. So my calls are going to expire. Right, my choice to buy the stock at 40 when the stock is at 32.5 has no intrinsic value. Right, and it looks like my 40 puts came through for me. Right, my 40 puts with the stock at 32.5 are worth 7.5. So now I just got to see, did they come through enough to pay for the mistake on the other side? Right, and so now I just net those 2 numbers and see if I'm happy or I'm sad. So let's see, I'm out 6.5. And I brought in 7.5. So am I happy or am I sad? I am happy. And then I just got to remember that I got 200 shares there, right? 2 contracts. So that's a $200 profit. All right, that was 1.5. Which one was that? That was
Dean-
1.5. Yeah.
Dean, I just have a quick question regarding this question. I've seen, buys 2 RST 40 calls and pays a premium of $4 each. That's very clear that each of those calls is $4 each. However, I've seen questions that say and pays a premium of 4. So
They could give you the totals. They could have said, I could have said this. An investor buys 2 RST 40 calls and 2 RST 40 puts for total premium of 6.5. I could do that. Right?
but I've had questions where it doesn't say a total premium. It's just saying pays. I think it was on STC. I actually think I've seen it on Kaplan and just pays
Find it,
4.
you don't have to wait for the next jam session. You could just send me the QID.
Okay.
If it's a STC question, then you got to screenshot it. But just send it to me. I'm more than happy to, make it, walk you through it.
Sure.
By the way, what I would do if I'm not quite sure about the questions, content or grammar, or then I would probably go for like process of elimination. I kind of say, okay, well, if I think it means this, what would be my answer?
Right.
I would tell you the Kaplan. I don't know if Kaplan are bigger jerks than STC, but all test vendors I think are bigger jerks than the actual jerks who write the test. That to say that sometimes I think they've got like gotcha questions where you do it the wrong way. It's one of the choices. You feel pretty good about it, and then you missed some little thing that was the hint that you should have been on it. Let's look at this rationale. Well, there you go. Right. Look at that.
Yeah.
As a test taker, I give myself some grace, and if I roll to the rationale and it takes the half a page to tell me why I missed it, I'm gonna say, I've been trying getting Kaplan to do this. Maybe I'll approach Notman or STC. I think it would be wonderful if it actually tracked how people answer the question and tells you how many test takers miss the particular question and how many test takers get it right. Because I think it would be kind of helpful for a couple of reasons. One, I think you wouldn't feel so bad if it tells you 80% of test takers miss this question. You go, well, okay. Now, if it said and not 100% of them get it right, you go, oh my God, I should have got that right. I think it also would help the vendors get rid of poor questions, right? Because I would say if nobody gets it right, that's kind of on the test prep vendor. It's not really on the test takers, right? All right, let's see what our next one is. Looks like we got Maddie. Let's see, this was that one. Let me clearing up my slides. This is from the SIE exam prep book. It says the answer is C, but it's more than the 8% limit. I'm not sure what you mean about the 8. Oh, there we go. Let's see if this is going to be like my friend. Oh, look at that. That's just so cool. An equity index contract holder. Now, you didn't tell us, Maddie, SIE. I don't even think you're going to see an equity indexed annuity on the SIE. I think you would definitely see it on the 65 or 66. And on the 65 or 66, the test question is an equity index annuity has no negative reset. And that's why it's not considered a security, because there's no way you can go backwards. So here it has a minimum rate of 4. So that means if the market does 3, the market goes down 20, I'm going to get 4. I like to make up a number so I can kind of walk myself through the math. So I'm going to say it's $100,000 equity indexed annuity. And that just means I know there's no circumstance in which Dean is not going to get at least $4,000. Right? Because that's what it means, 4%. Limit upside of 80% of the referenced index. So, if the market goes up 20%, that's 20 grand, but I'm only going to get 80% of the 20 grand. I'm going to get 16, for example. Up to a maximum. Oh, I tell you, insurance companies are so stingy. Right? I just told you if it goes to 20, I'm going to get 16, but then the insurance company said, well, no, Dean. You're never getting more than what? 8. Right? So I'm not going to get 80%. Let's see, 80% of the 12, that would be $12,000. Right? But it said I'm not getting more than 8. So I don't know what, let me get out my calculator.
The 80% is the 9.6, but my question is just how can it be over the 8? If C's correct, isn't that because it says a limit of 8%, a maximum of 8%?
Yeah,
So
I'm with you. So who's the vendor here?
I'm not sure.
Yeah.
I've been
It's
studying with
from
Haley.
test prep books. Sorry, Maddie and I work together. We've been
I have
studying
no idea.
together
I
for
have
the
no
test prep
idea.
book.
I'm with you. It says a maximum up to a maximum of 8. I'm not sure why it would be that. I don't think, to be honest with you, I'm not sure who you got the book from, but I just told you, I don't even think you're gonna see anything like this on your SIE. The only exam where equity index and annuities show up is in the 65 and 66. So,
Okay,
is
thank
that
you.
fine with you? I think it's a poor question. All right,
So
let's
would
look
only
at-
VAs show up on the SIE?
what's that?
Would only VAs then show up on the SIE?
I'm sorry, one more.
Would only variable annuities show up on the
Variable
SIE?
annuities would show up for sure, yeah, variable
Okay.
annuity, yeah. Mutual one with insurance wrapper, certainly, right?
Okay.
Okay, let's see, looks like we got one more here in the queue, so this is a Kaplan question, let's get rid of this. Boom, I'm gonna get rid of mine. And it's a series 7 question. And it's 1468211. Is this series 7, Andrew?
Yeah, it is Series 7.
Oh, it looks like I got 1468211. So that's not coming up. Was it a part of a mastery exam or screenshot in the thing?
It may have been maybe part of a simulated exam.
Yeah, sometimes they rotate the QID on that.
Uh,
That's probably why it's not coming up. Do you have a screenshot you can put in there or not?
yeah, one sec. Let me get this real quick.
An investor with no other position buys 2 June 45 calls at 3. So I always liked it before I jump into a question, spend a lot of time on the setup. And I like to spend time on what I call contract specifications. So here I have a choice to buy 200 shares of DWQ at any time between now and June for 45. I paid 3 at 3. So this is the one I think you were telling me about, where it's not clear whether that's 3 times 100 times 2 or it's a total of 3.
Yeah.
I think it's going to be 3 each because that's usually how we express it. I don't tell you on like Apple that it's a total of 3. If you buy 2 Apple June 200 calls at 3, I'm going to tell you that's 3, and then you're going to figure out that's 600. So that would be what I guess, but that's because Dean, trades options, but we'll see. Let's go first and see if maybe we can use process of elimination. Let me see, where is my annotation tool? I don't know if it's not, let me annotate here. Let's see, where is my annotation tool? For some reason, it's not letting me do that. But anyways, we're gonna put out 3 in our dollar out column. My break even is 48, so I know that 47 and a quarter is not bueno. Are we clear that's not bueno? Because I'm a bull. So 47.25, it says when the stock I exercise. So I paid 45 for the call. 45 is my strike. I paid 3, so I'm out 48. I'm still going to exercise to get back some of my money. I'm not walking away from a choice to buy at 45 when the stock's at 47 and a quarter. But the reason you're a loser here, Andrew, is because you were wrong about one of the 3 things. It's really tough to be, make money in options because you got to be right about 3 things. Here you're saying DWQ is going up. You're saying it's going to go up at least 3 points north of SIP 45 to cover your out-of-pocket cost. And you're saying all this is going to take place between now and the 3rd Friday in June at 11:59 p.m. Eastern time. If you just buy the stock, you'll only be right about one thing. Right, so if I buy the stock at 45, which I have a choice to do, I'm out 48, I'm going to lose $75, right? And now it's going to be on 2 contracts. So I would have answered this C, and that's how we express it. If they wanted you to do that, they would have said something like a total of 6.
Yeah, I answered it as C, so that's why I'm.
Yeah. Did you get it right, I hope?
I don't.
And I give you the answer? Is it one of those simulations where we don't give it to you?
I don't think I may be able to find it elsewhere, but
That's all right. Like I said, I wouldn't. But by the way, you got to listen, guys. You got to be resilient. You got to give yourself some grace. Part of the process is missing questions and dealing with these kind of things. And I had somebody, and it's counterintuitive, but they were so down on themselves. Like, oh, Dean, I missed 100 questions today. I said, well, why are you down? That's a wonderful day. Let's see if we can miss 200 questions tomorrow.
Yeah,
That's
I
what
think
we're trying to do. We're trying to miss as many questions as we possibly can between now and test time, right? So,
yeah, in terms of my notes, I'd said, how do you know it's not 225, up
yeah.
225.
Yeah.
So
Well,
I
I love that too, by the way. I love Andrew being an active test taker, taking notes, I like to talk to myself.
yeah.
The more active you can be. Sometimes I see people doing like their practice testing, look like they're a mouse and they're in a maze and they're gonna get some cheese at the end or something. Right? So as active you can be. I would get in trouble, Andrew, if I were taking a lot of these tests over the years, but I would get in trouble because I'd be talking to myself. I'd go, oh, I wonder if they mean 2 here, or do they mean 1? I'd be talking out loud to myself and they said, Mr. Tenney, other people are trying to take the test. I go, well, I don't really care about them. Look at this. They're trying to get me right here. Bastards. I'm joking, but if you can have a running conversation, the more active you can try and stay in the material, I think the better you're going to be as a test taker when you go down there and take your test, right?
Yeah,
Well,
I think the
that's
answer,
it. So listen,
yeah,
if you are watching the video replay of this, I just want everybody to know, and I think it's for your patients too. This is a free session we do. And paid tutoring, paid activities always come ahead of this. And so if somebody calls me at the last minute and wants to book an hour of tutoring or $300 and I have to remove the free Q&A jam session, I'm going to do so. So on the free sessions, I try not to move them around too much. If you're want to do another one, I just put another one up. I put them up as we go through them, right? So there'll be another session. And if you're, an active participant on the channel, you join us on the Tuesday lives, you join us for office hours, things like that. I am willing to, you tell me, hey, Dean, can you put up another jam session? I'd be more than happy to do that, assuming the time is available. All right, anything else? The 28th what's the 28th, Andrew? Did you book tutoring?
yep, I have a 90-minute with you.
Oh, hey, okay. And so, Andrew, the other thing you get as a paid student is free office hours, and that's up there too.
Oh, awesome.
So, that's free office hours for paid students. So if you spend some money, then you can join us for that as well. So the free things on the booking page are the jam sessions and the office hours for paid students. And I haven't put up, you guys can send me an email or do it. I usually put up something that's cheap, that, like a evening class on options or, an evening class on something. And I usually charge 25, 35 bucks, but the point is 2 things. It's not really money because, to be honest with you, $35 doesn't really move the meter for Dean. But what it does is give me content for the channel, and it gives other people access to that paid office hour. So if you have like something, it can't be something esoteric. It's got to be like a subject area. If you say, hey, Dean, can you put up an evening class on convertibles or types of orders or something like that? I'm more than happy to do that. All right. Anything else for night?
Thank you very much.
I
Okay.
think that should be
okay.
all. I appreciate it a lot,
Yeah,
Dean.
yeah.
I'm taking my exam next week, so I'm getting
Woo-hoo!
prepared here.
Great
Yes,
stuff.
sir.
Good luck.
Good energy. Now, Mike, have you heard of my thing that has 100% pass rate? Have I shared the secret of 100% pass rate with you yet?
I don't think I've heard of that. I might have seen
Here
that.
you go. 100% pass rate. Make sure you make your mark every night, every morning. I want you to go into your bathroom. I want you to look in the mirror, and I want you to say, mirror, mirror on the wall, who's the greatest Series 7 test taker of them all? Mike, Mike, Mike. Rah!
That'll be me. That'll be me.
Yeah. If you don't make it, don't tell me, because I have to tell people it doesn't have 100% pass rate anymore, right?
No, I should be able to. It's third attempt, so I got it.
Pressure's on. Pressure's on. All right, everybody. I'll see you for the next jam session if I don't see you sooner. Mike, when you make your mark, come back and join us Tuesday night. I always like victorious test takers in the house. It's always good for morale for other test takers. I don't know why they don't want to believe me what's on the test, but sometimes it's better when somebody says, and I saw this. Now remember too, if you got people in the office you're studying with, be careful because every draw is different. So, sometimes people come back and, oh, Mike, the easiest thing I ever did, I know what the big deal is. And, somebody else comes in, oh my God, it was the hardest thing I ever did. So, guard your psyche. Try and stay away from energy vampires if you can, right? And give yourself permission to say, hey, I'm fragile right now. I'm studying my exam. Any space you can give me, we greatly appreciate. I was working with somebody and I said, listen, I want you to go make sure they understand and committed to giving you the time. And it sounds like they're nice people. They said, Dean, they're giving me 2-3 hours a day. I said, well, let's make sure we actually block that. Say, okay, hey, thanks so much for the 2 hours. That will be 8 to 10 a.m. Thank you very much. Make sure you can lock yourself away. All right, everyone. I'll see you in the next one. Remember, inch by inch, your exam's a cinch. Yard by yard, your exam is hard. I'll see you next time. Bye-bye.